Once upon a time, money was limited until humans discovered how to make infinite money. They called it quantitative easing. Gladly. A fancy way to say, let's print more money. Everyone was happy. Stocks went up, houses went up, everything went up. But wait, if everyone has more money, who's actually richer?
To understand quantitative easing, let's go back to 2008. Banks were failing, people losing homes, and panic spreading everywhere. So the government decided to do something radical: print money to buy debt. Trillions of dollars poured into banks, hoping they'd lend it out. But instead, they just held on to it, Crayon, and markets got addicted to easy money. The stock market loved it. Prices soared like never before. So, how does this money printing actually work? The Fed doesn't really print paper, it's rands. They create money digitally.
Look! We made $1 trillion with one click!
But when money grows faster than goods, that's when inflation happens.
It's not just America. The whole world follows this system now.
But what happens when one country prints money for everyone?
Their local money loses value against the stronger dollar. For a while, everyone enjoys cheap goods and easy trade. But local industries can't compete with endless cheap imports.
Jobs disappear, replaced by digital dollars and outsourced production.
Some say this leads to a great reset path, a planned overhaul of the financial system.
With central bank digital currencies, every transaction could be tracked. Imagine your spending habits controlled by a central authority. This system relies entirely on trust, Sword, and that trust is cracking. Understanding how money works is the first step to protecting your future.
And every warning sign points to a growing problem: the mountain of debt.
Governments, like eager shoppers, borrow more and more.
And to fund that debt, central banks simply create new money out of thin air to buy government bonds. This newly created money first enters the financial system.
It pushes up asset prices, stocks, bonds, real estate. Those who own these assets, in turn, the already wealthy, see their fortunes multiply. But for the everyday person, it's a different story. The value of their hard-earned money quietly shrinks, an invisible tax. The gap between rich and poor widens, creating new social divisions. And so, the inflationary cycle continues, fueled by debt and new money. At first, everyone feels richer. It's magic money. Shops are full, markets boom, and politicians celebrate. But printing money doesn't create real value.
It just makes more dollars chase the same goods. That's inflation! Why is everything so expensive now?
The illusion continues. Printed money looks like wealth. But real wealth is created by production, not paper.
Wages don't keep up with prices.
The poor feel inflation first. Groceries, rent, gas.
Wait. How did it double since last month? The same money buys less every day.
Inflation is the invisible tax that steals from everyone.
Your savings quietly lose power over time.
But banks? They love inflation.
They lend money that didn't even exist yesterday. Each loan creates more dollars paid, multiplying debt faster than growth.
The debt machine never sleeps!
Every dollar printed is a promise to repay. And those promises keep piling up.
Every crisis is met with more printing.
They call it quantitative easing, a fancy word for printing.
QE inflates asset prices, stocks, housing, bonds. The rich get richer! And everyone else feels the squeeze.
Inequality becomes structural.
Prosperity comes from productivity, up, not paper.
But the system rewards printing, not producing.
Because the dollar is global. The world feels every pulse.
Other nations' money weakens as dollars flood markets.
The U.S. exports inflation pro and imports cheap goods. It works until trust in the dollar starts fading.
Now nations turn to gold for safety.
Cracks are showing in the global system.
The machine is overheating!
Stop printing and markets crash. Print more and inflation rises.
Two monsters. One impossible chose.
Can balance be restored before it breaks? The war on inflation begins.
But the damage might already be done.
what happens when money becomes infinite?
At first, it feels like paradise.
We're rich! Wait, why is bread $100?
Because when everything inflates, nothing is worth more. This false easing erodes the very value it claims to create. Every new dollar steals a bit of yesterday's value.
It won't stop! It never does!
Money burns fastest when nobody trusts it anymore. True value can't be printed. It must be earned.
It's spiraling out of control! We can't stop printing. Then we can't stop inflation.
Debt became the engine and the bomb.
More fuel! We're out of money!
The bigger it grew, the closer it got to collapse.
We've lost that control!
And in that silence, the truth appeared.
Because money isn't paper. It's belief.
Real wealth is what we build life, not what we print. If money grows from life, it can sustain life.
When creation replaces inflation, prosperity returns. And maybe one day, we'll stop trying to print forever.
Because even machines must rest when the lesson is learned. And trust takes generations to rebuild. The end of printing is the start of rebuilding.
Crayon Capital. Why? Explaining money one doodle at a time.
And so, the crayon-drawn world reminds us, understanding the economy is the first step to building a brighter future, one doodle at a time.